Visit tema.ca.
Tonight on Market Call, we've got David Burrows. He's president of Barometer Capital Management. He's taking your calls and emails on North American large caps. Good evening and welcome to Market Call tonight. I'm Mark Bunting. Thanks for joining us as always. You can call us toll free if you'd like to talk to David. If you have a question about a North American large cap, 1-855-326-6266 is the number. David, of course, can talk strategy as well. Send an email if you like too. The address is marketcall@bnn.ca. Happy New Year. Great to see you.
Happy New Year to you. It's a good thing, I think, for a lot of people to see last year pass and be into a new year. I think so,
yeah. But are things that much different, even though the calendar has turned over? Are you still looking at being targeted as far as sectors and stocks?
Yeah, I think at the end of the day, we're still probably in the halo that comes around the holiday season, but should be coming out of that over the next little bit. I really do think that there are going to be some very good opportunities this year, but I think you will have to continue to be targeted. I think there's really a market of haves and have-nots. And if you can focus on where the money's going, there's some money to be made. But I really do think that it's a stock picker's market, and it's a market where you're going to have to continue to be tactical and pick your spots.
Now, in promoting this show, I've mentioned a couple of times that you love to look for stocks that have momentum by various degrees, and also that are working right now.
Yeah, you know, we think that at the end of the day, when markets do have a bump and have a rally, you want to be in the things that people care about now. And so to try and forecast what might do well somewhere down the road, I think at times is difficult, because if you have a great company in the wrong sector, you don't make any money. So given the fact that I think in general investors continue to become more and more risk averse given the ups and downs they've seen over the last few years, you have to make sure you're in the right spots, because there are fewer participants in the market right now. Realistically, lots of folks have gone on to do other things. And so I think that you want to be sort of where the capital flows are going, and be in securities and businesses that are good, getting better, that are attracting new investors.
And which sectors are you favoring right now, David?
Well, you know, we continue to favor the midstream energy companies that are providing infrastructure to the energy industry. We continue to favor the REITs. We continue to favor large cap global dividend payers, where the cash flows are stable and where there's some predictability, but where you could get a reasonable dividend, but one with a growth rate attached to it. And that really is where the institutional money's going. That's really where the private investor money's going. And they probably are a little bit more insulated from the economic cycle.
What's your biggest fear about 2012 as far as event risk? You wake up one morning and something's happened.
Well, you know, I mean, the risks are well publicized. You know, clearly there are concerns about what may happen next along the way in Europe. Policymakers have been very good along the way of punting things down the road. There's a lot of issuance that has to take place in the next 6 months. There's risks of downgrades, those types of things. I think that's one issue. And that ultimately is going to serve to hold back growth in the European economies. And I don't think that's a surprise. The question is how much. The second thing I think that we have to watch for is what the market's telling us about China. I mean, we all can see the potential in China, but stock markets are pretty good at identifying risks down the road. And, you know, Chinese market down close to 3% so far on the year and basically bouncing along the lows.
Do you see a hard landing or soft one, or somewhere in between?
Well, I think that if you look at the way that the big commodity stocks are behaving, and the commodity currencies and the commodity stock markets like Brazil, Australia, and Canada, none of them are telling you right now it's imminent that it's getting a lot better. So I think that there's a risk of a hard landing. The good news is the Chinese do have lots of policy levers that they can pull. You know, they're not like some of the other governments that basically have thrown everything at the issue. So we'll see how that plays out.
And after hours, of course, as we wrap it up here, Alcoa cut 12% of its smeltering capacity globally. So that was interesting. And Alcoa, the big aluminum company, of course, will kick off earnings season on Monday. Now, we'll come back right after this with David. He's answering calls and emails today on North American Large Caps. But as we go to break, we're going to look at the Barometer High Income pool of David's company. And by any measure, by any time frame, it is beating its peers and the benchmark index.